Please read this disclaimer carefully before proceeding further. Welcome traders to analysis of gold. My name is Vic. Thanks for joining me here. Because we have started a new month, a new quarter of 2021, it is very important for us to look at most of the markets in a fresh light. What kind of opportunities that we are going to have in coming weeks or coming days, or maybe in coming months as well, depending on how you want to trade them. So let's look at gold, what it has been doing and what kind of opportunities are available for us. But before we go any further, remember always to check dollar analysis. I've already posted dollar analysis on the channel, so go and check it out. But for now, I'm just going to quickly revise that we are here in this FCP zone and there are further chances of a dollar to go down. But because we already had a correction before, this correction may not be a deeper one, so you have to be careful. Ultimately, the dollar is still bullish and it can remain bullish for quite a while. So after a little bit of correction, the market may go back up, and if that is the case, it can also impact gold. Now, gold and dollar may or may not be always inversely correlated. They can be inversely correlated, like one goes up, another one goes down for some time, like in a few hours, maybe like in a few days or maximum a week or something. But right now, both dollar and gold are supposed to be bullish. When I say bullish, I'm not talking about 1 day or 1 hour. I'm talking about over a few months and maybe a year as well. So they are expected to remain bullish, and if that is the case, then the correlation, inverse correlation, may or may not work for you if you're looking for a longer period of time, if you're taking swing trades. So I have to be careful about that. The dollar always brings gold down. Bullish dollar always brings gold down. That is just a myth, and you must not trust on that, because markets evolve and markets always find new opportunities and new ways to to attract investors. Cryptos were not there before, so the entire market was divided between gold and dollar. If you were trading gold and dollar, then you would have looked at that correlation. But now think about the money flow. The money has gone to another other asset classes. The new asset classes have started to come in. Cryptos are one of them, and if that is the case, then it is quite possible that the money which was supposed to flow to gold or dollar has started to flow to now cryptos. So that means these two asset classes, gold and dollar, these two can actually be bullish at the same time and bearish at the same time, because the previous equation of money flow may or may not exist anymore. Okay, so you have to be very careful. So let's see what is happening on gold. Okay, on gold, the market fell down into this FCP zone. Remember, if you have been following my analysis, remember 1681 level that I identified a few months ago. Actually, since since August 2020, I've been talking about this particular level of 1681. The market came there and started to go back up, and now it came down to create this sort of double bottom here in the same FCP zone. And all of these levels have been really good for us. We were able to take few trade opportunities here, when the market created bull traps and bear traps, and finally it came back down. Now it created this kind of double bottom here. Now I know that most of the traders will be looking at this double bottom. They will be thinking, yes, really, look at the double bottom, the market is going to go up and it will continue to go up. But remember, the market may actually go back up in steps. It can go back up, but you cannot expect it to go all the way to higher potential targets just now, because markets always create bulls and bear traps. So there is still a possibility that it can fall down to 1667 level or so. Okay, we'll see that in a second. Now, because we are a new quarter, what we should do is we should start to analyze again with fresh set of eyes. Let's have a complete new look at this. So what I'm going to do is just simply remove this entire thing and bring in few other things. Okay, so what we have now is we are going to look at the 3-month time frame, because we have just started a new quarter and this is how it is looking. You see the W pattern that we have been looking at since August. that has pushed the price back down into this level, and this is where the W pattern's first profit target has completed at 16.18.1 level, and the market has started to go upwards, which is expected because that level is very strong and the market is expected to go higher. Now if this bullish momentum continues to go higher, then it can go and create another all-time high on gold. That is quite a possibility. I am bullish on gold long term, but when you are talking about trading, you must remember that market keeps on going up and down. It has its own way of reaching its target. It has its own path. So you can take both bullish and bearish trades while it is going up and down in that journey. So the market can actually go higher. So if I draw fib from here all the way to this place, this is where the market has come to, right at this level, and that's when the market started to go higher. This is what we do in our FCP strategy. It's a very simple strategy. All you had to do is just identify the patterns and then start to use the measurement tools to define, to see whether the market is expected to go higher or not from certain areas or levels. Okay, so these are the levels that you should be looking at if you want to trade gold for a longer period of time. So these are the levels which are available to us. Now that's the 3-month area. Now how do we read this candlestick? Now this candlestick is a very bearish candlestick, right? But because the previous momentum has been very strong, so we can expect at least 3 months of bullish momentum, at least one candle to be bullish at least before it starts to fall down once again. Now this candle, if it finds enough momentum and creates all-time high, then again we'll have to be careful that the market can create a double top at this level, or even a little bit higher as well. That's also a case. Now do not rely on bloggers and all those places. Always look at the charts, because as I always say, charts never lie, right? I just read that somebody has just put in a case, just because of this little bit of support that it has got. Now somebody has just started to post that gold is going to go to 34,000 now. Now how can you define that just by looking at the chart? No, you cannot. So as a trader, it's your job to make sure that to look at the chart and read it for yourself. Just see what is happening in the market. Now if I go to the 12-month time frame, the market has come to the previous structure, which lines up very nicely with the zone, with the level that we found, and that's why it has started to show a little bit of reaction here. And if I show you the monthly time frame, on monthly time frame the market is sitting on mid of the Bollinger Band, and that is also why it is expected to go higher. So if it starts to go higher, then where it is expected to go to, if we put these lines here, these are the levels where it can go to. These are very important levels, and if I draw fib on it, these are some of the levels that we can identify. There is an FCP zone here as well. So these are very important levels where gold can go to on monthly time frame. Let's look at the weekly time frame. On weekly time frame, the gold can fall back down into this, because you see there is a case for gold to be bearish. And why am I saying that? I'm saying that because of a few reasons. One is this, that gold is forming an M pattern, and that M pattern looks like this. And this M pattern actually does not complete here, it actually completes somewhere around here or even further down. And what we can do is we can use fib to identify near about that area. So if the market has come here, so I'm expecting gold to come, it can actually fall down to this level as well, which is 1500 level as well. And there is obviously an FCP zone right at this place. So these two FCP zones are also valid. Let's just mark them properly. These FCP zones are still very valid, but for now what we can see that the market is creating kind of double top. Because why? Because we have the 618 fib level here, which is acting as support. But look at the last week's candle. This was supposed to turn into a bullish candle, because there was so much of bullish pressure from here. But you see, this has actually stayed as a bearish candle, which tells me that there can be a chance of actually having a bearish candle, just to fill this wick. That's quite a possibility. And in worst case scenario, it can actually start to fall down. And if that happens, then we have another level in the middle, which is this level of 1650 or so. Okay, 1650 or so. And there is another one which is a minor level, but it can actually turn into a major level, which is 1668. So this is a minor level, but if the price comes here, then you can expect a bullish movement as well. So these are the levels that I'm watching. Now, because we also have an M pattern here, the market can go higher, and if we draw fib on this, then we can expect it to reach near about this area or so. Okay, so that's quite a possibility. Now there is a gap as well. In some of the feeds there is a gap available at 1805. So just put a note in your trading plan that there is a gap around 1805 near about this level. So there is a gap, possible gap here, which coincides with this FCP zone as well. So that's quite a possibility that market may actually come there. So how do we trade this? If the market starts to, next week, how the market opens, that is going to be very important, because the market may actually turn into completely bearish candle filling this wick, or even actually fall down to one of these levels before it goes back up. You see why? Because this is the double top which has created, and it will lead a lot of traders to think that the market has bottomed and it will go up, and that's when the problem starts. This can very well turn into a bull trap, and market may fall down to collect all those stop losses and before it starts to move higher anyway. So that's quite a possibility. And so if the market actually starts to go higher, then these are the levels that we are looking at. That's the FCP zone, and at all of these levels, expect that market can correct. It can also cause reversals. It can also create reversals. And if the market starts to go down, this is the very good level that we can look at, 1630, but between them we also have these two levels present. So that's what we have. Now let's look at on WATA monthly. We already have a bearish signal, which is expected to reach near about 1550 level or so. So if I come here and show you that it's near about this level here, 1520, because the market may actually come here to complete that AM pattern that we were talking about, right? And that will confluence nicely with 200 moving average, which is probably going to come somewhere around here. So that's a possibility on WATA. Let's look at on weekly time frame. On weekly time frame, the market may go back up to retest this WATA curve, which is around 1822 level or so. Okay, that's possible, but only if it starts to go upward. So far it is looking bullish. This is the early bullish sign here, because the color has changed from red to blue. So this is turning bullish. Let's go to the daily time frame. This target is still open, because you see so far it has not violated its stop loss. That means the market can still reach this profit target of 1769, but even before that we have a first target at 1757, because WATA curve is also going to act as dynamic support and resistance. So we can reach near about 1757, and then it can come to 1768, near about that level as well. If I go to the 4-hour time frame, the market has been bullish. It has been able to reach the first profit target, and it has come to WATA curve. Now there was not much of a reaction, so what I'm expecting that the gold can actually go back down a little bit, because it needs to come back down to this WATA curve, and because the color is still red here, the WATA curve is showing that it still can fall down. That's a possibility. If I go to the 1-hour time frame, this is also looking like bearish sort of thing, because the market is going down here, there's kind of divergence on this place, and this is looking like there is very soon WATA wave is also going to turn into a red candle. But a lot of traders, a lot of what are subscribers have been able to take long for using this. I received messages from a lot of traders that they were looking to go bullish on gold around this level, and they made use of water. This was the signal. The color changed from red to blue, and color changed from red to blue, and this was the signal. You could have taken this one or this one or this one, any of them, or this one as well, to go long, because you see the water trend at the bottom was showing that market was going to go higher, the price was going to go down, was going downwards. That means there was a good divergence, and based on that, a lot of people actually made good money out of this. Personally, I stayed out of the market because my trading plan and my rules dictate that whenever the market is going to have kind of transitional period, I must stay out of the market. Because this was a weekend, month end and quarter end, I stayed out of the market, but I still have my 1681 position running from there, and I'm not going to close that because that is a risk-free position which is still on, and I will continue to hold this as long as possible. So this is what we had on gold. If you enjoyed this analysis, found this useful, you know what to do. Hit the like button, and in the comment section let us know what you think about this analysis, and please share this analysis with other traders and trading communities, because as it is helping you, it is going to help them as well. And in trading community, we always learn and earn by sharing our knowledge and analysis. So I'll see you in the next one. Have a great trading week, great trading month, and great trading quarter ahead. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to wikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students, and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to wikinsa.com, and under training section you'll be able to see and submit this form.